IMF has raised India's growth projection from 6.8% to 7% for the financial year of 2025. Now, this change reflects a carryover from upward revisions to growth in 2023 and improved prospects for private consumption, particularly in rural areas, that is. Now, in April, the IMF had raised its forecast for India's GDP growth from 6.5% to 6.8% for the 2024-25 financial year, that is. Now, the current revision further boosts the growth outlook, highlighting the resilience and potential of the Indian economy. Geeta Gopinath, the IMF's Deputy Managing Director, also said that growth in both India and China will account for almost half of global growth in 2024. However, the IMF cautioned that China faces risks stemming from weak confidence and unresolved property sector problems, which could lead to a greater reliance on the external sector. Overall, the IMF said it still expects the world economy to grow a lackluster 3.2% this year. That is unchanged from its previous forecast in April and down a tick from 3.3% growth in 2023.
The priority for policymakers is to restore price stability and address the legacies of recent crises. Central banks should be cautious about easing policies too early and remain open to further tightening if necessary. Where inflation data signal a durable return to stability, gradual monetary easing should proceed. This will also provide room for required fiscal consolidation. Fiscal policy should focus on rebuilding buffers, ensuring debt sustainability, and making room for priority investments. Finally, strengthening multilateral cooperation and reducing trade distorting measures is vital to address global challenges and promote sustainable growth.
The good news is that as headline inflation shocks receded, inflation came down without a recession. The bad news is that energy and food price inflation are now almost back to pre-pandemic levels in many countries, while overall inflation is not yet.